Hey, it's Greg Rands. I'm here with Tony Cuiffo. Tony's the owner of a portfolio in the Pocono Mountains, west of New York City, that we're bringing out to the market right now. And we had such a cool conversation when he and I were first getting to know each other, and he was explaining this portfolio to me that I really thought it was powerful to be able to share this with anybody who was thinking about buying a portfolio, or anybody who's thinking about just SFR in general, being able to hear from an entrepreneur who's done it and who's had a great success with it. So Tony, how are you?
I'm doing well, Greg. How are you doing?
Doing good. Awesome. So we're late February right now, to put a mark on the calendar there. And so Tony, you've got a portfolio in the Pocono Mountains. I think most people in America have heard of the Poconos. So I want to give people kind of a general idea. Our approach to this is always that you're buying the place, right? Where is more important than what? The houses themselves are obviously critical, and they're the instrument through which an investor buys into a place, but the place is what they're really investing in. And so Pocono Mountains I'm on the map right now. As I zoom out, what people are going to see is that it's practically due west or a little bit northwest of New York City. And we're talking about 2 hours to get right to the heart of the Poconos?
Yeah, luckily Route 80 connects the Poconos to the Washington Bridge. So it's a straight shot about 80 miles or 90 miles straight out. And if there's no traffic, you could do it under 2 hours, but a normal expectation would be about 2 hours in. People do commute to New York City every day for work from here.
Yep. And that's one of the interesting things about what's happening now is that people are commuting fewer days a week now. But the Poconos is interesting. Almost everybody I know from New York has been there. Even in the last couple of weeks since you and I got together here, I've been talking to people about it, getting them primed to learn more about this portfolio. And everybody says something like, oh, I go there on weekends, or when I was a kid, I went there on weekends. That's why I learned how to ride a snowmobile on a lake. Did you live in the Poconos before you started this portfolio?
No, I was familiar with it. I had come up here, as you said, as a kid, or even in college. We used to rent cabins in the woods, but I never had any experience in real estate investing at all. And then we were doing a renovation on our home in 2012. And one of the carpenters that was doing some work lives up here. He lives in the gated community that I started investing in. And he told me that there was a foreclosure near his house that was for sale for like $15,000, and would I be interested in investing? And I really had no interest, but he was such a good carpenter. I figured, you know what? I'll give this guy the money anyway. That was the first house we bought, and the rest is history, as they say.
And this was what? This was about 2013, 14?
2013.
So when you got in there, we're talking about, the prices of your houses are ranging from $80,000 to $150,000. But nobody in New York thinks that there's any house in America that you could buy for $100,000. So it doesn't exist anymore. When you're watching TV and listen to the radio out here, are you picking up New York stations from the Poconos?
We get a lot of Philadelphia stations, a lot of New York stations, but there's some good local Scranton, Allentown stations too. So the Scranton, Philly, Allentown type of triangle, those are metro areas too. Allentown is one of the biggest healthcare hubs now. It's definitely going to rival New York City. All the medical innovation along Route 78 right now, the competing hospitals, there are hospitals that are literally almost a mile long, that they occupy that much of Route 78 because they just keep building buildings next to each other, and they have different specialties, neurology, oncology, et cetera.
How far away is that then from your portfolio?
30, 40 minutes.
Wow. I'm glad you brought that up. And then Scranton, that means is what, 15 or 20 minutes away?
That's about 30 minutes north also.
Yeah, really interesting. Before I get to the trend, I just want to ask, because I know the Poconos, from growing up in New York, it always seemed like there was some new thing happening in the Poconos. It was trying to break out as a vacation area. What have you seen happen since you've been immersed in the market since 2014? Was it evolving already before COVID?
It was. Here's how I would sum up the evolution. It went from diehard people that wanted a vacation home, that didn't want to travel or get on airplanes, that were content with doing the same thing every summer. It went from that sort of a model to, I would just say it's more amenity based. You've got Kalahari, which is one of the bigger water parks. You've got Camelback, which is a ski resort, and they just built a water park. Those are both within 5 miles or 6 miles of the houses that we own. But it always has been like a budget honeymoon type area. Now, this Airbnb thing is just it's really exploded. A lot of landlords have gotten out of the long-term rental business and gotten into the Airbnb business. So the demand for rentals, you and I have always kid around. I said, I have like a negative vacancy rate. It's true. I keep a waiting list on my desk of 3 and 4 bedroom people that when I have an opening, I call them and my houses are rented like that day. I've never in all my years seen so much sight unseen real estate buying. People are coming from the city, buying houses sight unseen. These houses, even if you just believe in Zillow for what that's worth, in the last 90 to 120 days, these houses are up 40%.
It's an amazing thing to see how migration patterns that were already underway just got accelerated by COVID. The only comp that I can think of the disruption that was created in the housing market and the economy overall was 9/11. And one of the things I knew happened back then, because I was in the real estate business in the New York area, was that everything froze up in September, October, November, and then everybody started making a mad rush to buy real estate. And we had the boom of the 2000s. It became a bubble later, but it was a bona fide boom in 2002, 3, and 4 for all kinds of good reasons, right? People they were valuing the tangible. But now you've got so many people that are coming out of New York. A lot of them are going to Florida, but not most of them. Like the people that have a lot of money are going to Greenwich. People that have less money are going to, I think, the Poconos.
A couple of things that I think are worth mentioning. You were talking about 9/11 and the big thing that created this rush to the suburbs. I think what's fueling the rush to the suburbs now is what didn't happen. This area was very slow to recover from the real estate crash of 2006, 7, and 8. So there's a lot of lagging in pricing. We haven't hit 2006 price levels yet. Some of my houses were built prior to 2006. And if you go on Zillow, you can see what they sold for. So what happened was this market really never caught up. That's because it was primarily a secondary home market and people were losing their shirts in their primary homes. They certainly weren't going to risk capital on a secondary home. Even if you adjust it to what you think it should have been and you allow for 1% growth between 2006 and now, you're nowhere near what these houses are still selling for. They're still selling for a discount to that number.
Yeah, here's a chart that kind of depicts this. So the green line is Monroe County, where the properties are, right? This is going back to 1996, but started out kind of close to the national average. Pennsylvania didn't have as much of a housing boom or as much of a housing crisis. But if you look at the green line, it did have a bit of a boom, and then it came down and it stayed down. And it still hasn't made it up to where it peaked when things were crazy back in 2006 and 7. Right in the beginning of the crisis, median price in Monroe County, 168. Now, median price 160. But you can see what's doing now. You picked it up right before the curve, which was down, 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 down. You started buying as it was at its trough, and then it started coming back up again. And we know the curve is steepening in the right direction right now. For me, it feels like it's a perfect combination of it was suppressed, maybe artificially so, where the demand didn't make its way back. The trajectory for the last 5 years has already been in a direction where it's tracking with the rest of the country, but beginning to close that gap. And now we know that it's elevating, and I think it's going to close the gap. Like if I was buying this, what I'd be saying to myself is how long before this portfolio is up in value 25%? Is that a 5-year bet that it's going to get 5% a year for the next 5 years, roughly? That's not even compounded. Or is there potential for this to be a 3-year? Or am I going to have to wait 7? Because if you put 75% leverage on the portfolio and you get 25% appreciation, you just doubled your equity. And the question that I always ask is, how long is that going to take? Because I always have faith it's going to happen. You're talking about a house being worth $125,000 that in the future is going to be worth, what, $160,000? It's pretty easy for people to picture that kind of a price jump in real dollars, but actually it's a 25% increase in value, which is substantial. And I think you're on the way to it right now. I know that you're an accountant by trade in your background, right?
Right. Well, I was educated as an accountant, and then I kind of drifted into the executive recruiting business after a few years of doing accounting.
Your accounting background, you had told me that your financial records are tight as a drum, and a healthy percentage of this portfolio is Section 8. So like 40% of it is Section 8, roughly. And tell us about that, like the quality of your tenants, the quality of your collections. Just give me a narrative on that a little bit.
I gravitated towards Section 8 for a couple of reasons. Part of it was personal, okay? So we fixed these houses up, not to flip them, but to give people nice houses. And without getting all kind of wishy-washy, I believe in the saying, to those that were given a lot is expected. And it kind of dawned on me one day. I was having a conversation with my daughter, who was maybe 6 or 7 at the time, and she was fighting with her sister because her sister was taking her time to get out of the bathroom. And I told her, I said, when I grew up, we grew up in a house with one bathroom. I said, there's 6 bathrooms in this house. I said, just go walk to a different bathroom. And she said to me, she goes, you mean you were poor? I said, no, I wasn't poor. I said, we just had one bathroom. That's how I was raised. So the reason I'm telling you that story is when I redid these houses, I wanted the Section 8 tenants to benefit from my hard work. It wasn't for any other reason. I'm realizing different benefits from that now, because now while everybody else is, making their mortgage payments or whatever, I open the mail on the first of the month and I see an electronic payment from the housing authority that goes in, which covers almost half my rent load. So that's one of the benefits, but it certainly wasn't my intention. Most of my tenants never even had a dishwasher in their house prior to moving into one of my houses. I gave them brand new appliances, a brand new refrigerator, a brand new stove, a built-in microwave, a brand new dishwasher. It's hard to put into words, but the appreciation and the lack of entitlement that I get from my tenants, it's much more important than money. Let's just say that I appreciate my Section 8 tenants, and I think they appreciate me.
So talk about your property management philosophy and your style, how you take care of these folks.
One of the things is, if you look at some of my lower priced houses, we base the pricing on cash flow. Some of the houses are priced way under market because they've got the same tenant I rented to when I bought the house in 2013 or 2014. And because they pay their rent on time and because they don't drive me crazy I come over and change the batteries in the smoke detector on a Sunday, which, look, I'm not going to say that this is nirvana over here, but I have tenants that I haven't heard from in 7 years. Okay. I visit them once a year. We do an inspection and we sign a new lease every year. But the only reason I hear from them is because I reach out to them. So those are tenants that have never seen a rent increase in 7+ years. And then there are other ones that stay for a year and just leave, or they try it out and they rent for a year. Then they buy a house. So, they didn't want to sink a lot of money into something. So they just wanted to see what it'd be like to rent.
Right.
And then when they move out, I just rent the place out for what I would consider fair market rent, which is usually higher. That's why there's a fairly big disparity in my rent range. I think I told you before, my collections are like 98, 99%. There's always a tenant who's $100 short or $150 short. And they say, can I pay it, on my next paycheck in the middle of the month? I'm like, of course. I treat them with kindness. And then, you know what? Sometimes the $150 shows up 10 days later instead of 14 days later.
I think you're spot on. They are a customer of yours, and what you're providing to them is their home. Being a good landlord is such an important thing for people who, like the people that have been there for 7 years and haven't had an increase, right? Some folks watching this might say, well, if I bought this, I would probably push those rents up. Maybe you will, maybe you won't once you actually get in here and see what's happening. And so I think it's great. And hopefully whoever buys this will have the same attitude and get inspired by what you just said to kind of be the same kind of owner for these folks. And they can raise the rent, but take care of them. Question on property management. When you're done with this, you're going to retire for 20 minutes, then maybe go do something else, but you're not looking to manage this for a buyer who comes along. True?
I would never say never. I don't want to contradict you or whatever, but if somebody said, help me with a 6-month to 1 year transition, I would work something out. I mean, okay. I'm obviously not the type of person that could sit still too long. The short answer to what you asked me is, I would want to see the person who bought this portfolio succeed. I would help them with getting the rent collections, the introductions, just seeing that the transition goes.
That's very valuable. That's very valuable. And I appreciate you saying so, because I know there are property management companies in and around the Poconos, and they could feel their way out and try to find somebody who will manage for them long term. But it's nice to know they can buy the portfolio, stabilize all the tenants, have the tenants see your face after the closing and say, okay, I feel good about this. And then they can make an orderly transition some months or maybe a year later. That's a great offer. I'm glad you said that. So thank you. Anything else you want to add before we close up?
We had talked about where I saw this market going and how it was shifting and everything. People that are coming in that are doing the investing are primarily Airbnb people, because Airbnb is definitely here to stay. All right. You talk about a big market shift. You know what? It's created a big opportunity here. If somebody didn't want to do a hybrid, I could never be in the hotel business, but if I wanted to, I could empty out 7, 10, 12 of these houses and just do that, and then balance the portfolio with 40 houses that get $18,000 a year rent and 17 houses that get $60,000 a year rent. There's a lot of opportunity here. And if I were a younger man, I'd probably consider some of those things. But all I could say is with a clear conscience, I could say that whoever comes in here and takes this over will have a lot of options. That's all you have to do. If you focus on that, you'll always do well.
So Tony, you sent me something last night that I wanted to share on this video here. So Zillow, who's not infallible when it comes to forecasts, you saw this, that they're projecting that in this zip code, their 1 year forecasted increase is 13.9%. That's incredible. That matches what the national increase was last year. It's certainly a nice point of confidence to see a 14% increase in value projected by Zillow.
Well, look at also, if you go back to that slide for a second, when they showed the median price last year was 110,000. This year it's 133. So that's already a 20% jump year over year. And they're saying, okay, it's going to cool off. It's going to go up only another 14.
Yep. So you put $2 million down on an $8 million portfolio. I'm using round numbers now. The asking price is a little below that. And the question is how long before it goes up 25%, where your $2 million becomes $4 million. I want to speak in those terms with people. Like if you've got some liquidity, you could buy a portfolio and turn 2 into 4. Maybe, according to these numbers, it's going to happen in 3 years. Can't guarantee it, but it certainly could. Tony Cuiffo, it's a pleasure talking to you. It's been a lot of fun getting to know you. I'm looking forward to engaging some folks who are going to see this and realize that there's more than an address list on this portfolio. There's a lot of cultural value and a massive amount of upside. If they just buy it and hold on to it, I think they ride the wave where the wave is already going for all the reasons that we say. One of my big takeaways in this conversation is that this was an entrepreneurial pursuit for you, right? You took an office, you go to work each day, you're looking at these people as customers, you're looking at the portfolio as a business, and you run it like a business, and you've done beautifully as a result. There's a lot of people I think out there that may take an opportunity to see something like this and say, I can move to the mountains, I can live in the country, I can run a business that's simple. It's not complex. It's not always easy, but it's not complicated. It's a people business. It's a hard asset business. I can make a great living in terms of income and then also watch my stack get bigger as the properties appreciate. I think it's an awesome opportunity. I love the fact that I have a chance to represent it and help tell the story. So thanks for giving me more time. I really appreciate it. And we'll look forward to the next conversation.
Wonderful. It was a pleasure.
All right. Awesome.